past adjustments, or they're also referred to as adjustments after closing of accounts. Now students, what do we mean by past adjustments? Sometimes it is possible that after the accounts have been closed and the accountant has followed through all the processes of accounting, we come to know that a particular part of your partnership deed was not followed religiously. That is, let's say, interest on capital. I'll take an example. Interest on capital, which was to be allowed, was either not allowed or allowed at a different percentage. I mean, this is the mistake of the accountant. But somehow it failed to catch your eye and it was passed as such in the books of accounts. Now, after a few days or few months of closing of this account, this error has come to light. How to rectify such errors? We will deal about this kind of rectification in past adjustments or adjustments after closing of accounts. That means those errors which are detected after the accounts have been passed by the partners. And remember, these errors generally relate to appropriation of profits only. That is what we are going to discuss. If there are other kinds of errors, so they are dealt as we had done in 11th standard, that is rectification of errors. So in this case, parts adjustment means rectification of errors which actually deal with the errors in the appropriation of profits. Now students, before we start with what and how these adjustments are done, we must understand the effect of these errors. Remember, appropriation means division of profits among the partners. Now this division can actually be in the form of interest plus salary plus some portion of divisible profits, or salary and divisible profits, or only divisible profits, as the case may be, or as the agreement of the partners. So what actually is happening, let's say there is an agreement among two partners A and B. A and B are two partners and their partnership deed provides for interest on capital at 10%. And nothing else is there. Thereafter, profits are to be divided in the ratio of, assumingly, 3:4. Let us take a scenario that your accountant has forgotten to give effect to interest on capital. That means interest was not provided. So what has happened? The partners have not received interest on capital. But on the other hand, since interest has not been deducted out of profits, that means your divisible profits must have increased by the amount of interest on capital. Again, since the interest has not been provided in P&L appropriation account, that means your divisible profits must have increased by an amount equal to interest on capital. So what has happened is that some partners might have received lesser than what they had actually anticipated or were entitled to, and some partners would have received more than what they were entitled to. So what net effect is that it is only among the partners. One partner has received lesser than entitlement and the other one has received more than the entitlement. So it is very easy. We can take back from the partner who has received the excess amount and pay it back to the partner who has received deficient amount. Now let me explain this concept to you by taking an example. Let us say I am just drawing a skeleton format of P&L appropriation account. This is a P&L appropriation account of a certain firm which has earned a net profit of 5 lakh during the year. Now students, if the interest had been allowed, interest on capital, assumingly for X and Y at 10% is coming to 60,000 and 40,000. That means the divisible profits for X and Y would be 5 lakh minus 1 lakh, that is 4 lakhs. And let's say ratio is equal, so they will get 2 lakhs each. Now students, this was the correct division. But what if the accountant has forgotten to provide for interest on capital? Let's say your accountant has not provided interest on capital. Since this interest has not been provided, it's an error on the part of accountant. So automatically your divisible profits would now be 5 lakh. How come? Since this is not written here on the debit side, that means 5 lakh minus 0, the whole 5 lakh is divisible profit. So you have divided 5 lakh as profits, out of which X has got 2 lakh 50,000 and Y has got 2 lakh 50,000. X was entitled to 2 lakh and he has got 250. So some amount has been given in excess and he was entitled to 60 which was not given. So what net effect is that a particular partner, rather than receiving sum of rupees 1 lakh in 60 and 40, has got it through profit in their profit sharing ratio. So now we will have to adjust this profit sharing, this distribution according to the profit sharing ratio. So what is to be done is that we will take the amount from the partner who has received certain surplus and provide that surplus to the partner who has received less amount than his entitlement. Now before this, you must take into account that there are two possibilities for this kind of rectification. One is that you redraw your accounts. Redraw means draw your profit and loss appropriation account correctly and again present it to the authorities. This is a lengthy procedure, it takes a lot of time. The other factor or other step that you can take is that since there is no error in the calculation of profits, the profits are correct. The only error is in the distribution. One partner has got more and the other one has got lesser than his entitlement. So what we can do is adjust only among the partners, that is through passing an adjustment entry. So one is, the course of action is, or rectification can be done by, rectified by either preparation of new P&L account or by passing an adjusting entry. Now students, this is a part of rectification, so we are not considering this and this is not in your syllabus per se. So we are going to start with how this rectification can be done using an adjusting entry. Let us take an example to consider the effect where a particular accountant has forgotten to provide your interest on capital, and let's see how that adjustment would be done among the partners.